The British pound is set to close the week with 1% weekly growth for the first time since mid-May. Overall, it remains the strongest G10 currency against the dollar this year. The reason for this strengthening of the pound was the results of the elections that took place yesterday in the UK. Importantly, since the beginning of June, market sentiment has been too tightly tied to the topic of elections that the clarity in at least one country has already brought some relief. Exit polls have already confirmed that the Labour Party is going to rule the UK government. After years of market instability under the Conservatives, the kingdom will have an opportunity to reboot its economy. Most likely, the new government will raise taxes and thereby help the Bank of England contain inflation. The economy may be entering a more stable period. At least the national currency and market showed this reaction today. The pound sterling recovered to the same level as in 2016. The pound traded at this level 6 prime ministers ago during the Brexit vote. Amid the stunning rally of the pound, the US dollar took a defensive position near a 3-week low. The US dollar index is now trading in the intraday corridor between 104.90 and 105.20 in anticipation of the crucial data on the US labor market. The non-farm payrolls for June will be published today at the beginning of the New York session and will show not only employment trends in the private sector, but also unemployment and wage levels. This data can directly influence the prospects for the funds rate of the Fed Reserve. According to the FEDWATCH tool, the market now expects a 73% chance of monetary easing in September. Such forecasts are based on solid fundamentals. In the light of a lot of macroeconomic data published earlier, the US economy is beginning to lose momentum. For instance, experts have spotted the signs of a deflation, a gradual decline in consumer prices. If the non-farm payrolls also record a decrease in wages, this will intensify the fall of the US dollar. Importantly, American traders are heading into a long weekend starting on a Thursday. Hence, the market's reaction to the jobs data may be muted, and you can learn about the impact of it in our video traders calendar. It's clear that apart from economics, the political component matters a lot to market sentiment. For example, the euro has been under selling pressure for more than a month since the announcement of the snap elections in France in early June. However, today the single currency has changed its dynamic. The euro has settled comfortably in the green range of 1.0812 to 1.0833, awaiting the end of this turbulent period. Judging by the growth of the euro-dollar pair by almost 1% over the week, the markets are very positive. The EU hopes that the far-right French national rally will not receive an absolute majority in the second round of the parliamentary elections on Sunday. So, the euro-dollar pair is trading higher today and has already overcome the round resistance level of 1.2800. Our analysts predicted this scenario of further growth in the euro. Moreover, if the instrument settles above the specified line at the end of the week, the bulls will be able to assert their strengths. Later on, the door will open for a complete recovery of the euro after its decline in June. If the opposite scenario develops, that's if the euro-dollar pair closes the week below the level of 1.08, the instrument may lose bullish momentum. Thus, the sellers will enter the market, urging traders to open more short positions. At the same time, gold has fair reasons for growth, such as the unclear election results in France and in the longer term in the United States, as well as alarming geopolitics. With Israel facing two fronts against Hamas and Hezbollah, the conflict in the Middle East risks escalating even further. No wonder the demand for safe haven gold is likely to grow. The US dollar may weaken after the release of the non-farm payrolls, so gold today has already risen to $2,360 per ounce. The metal is likely to trade higher within the intraday range of $2,359 to $2,376. All in all, the instrument is set to close with the gains for the second week in a row. Oil prices are also developing a steady rally this week. For example, the benchmark Brent grade was already trading above $87 per barrel today. The Brent price may record even a 3% jump by the end of the week. There are widely arguments for this. In addition to unfavorable geopolitics that could disrupt supplies, U.S. crude inventories contracted last week due to the strong seasonal demand. U.S. crude oil inventories fell by a whopping 12.2 million barrels last week. Analysts had projected a decrease of only 680,000 barrels. If the U.S. non-farm payrolls show a cooling of the labor market, oil may extend its growth and develop a notably rally. The Brent price has cut stock sideways in the last couple of days. Therefore, it will gradually catch up with the other financial instruments. The odds are that it will rise above $88 per barrel. From the point of a technical analysis, the price movement at the peak of the upward cycle indicates prevalent bullish sentiment in the oil market. For this reason, analysts foresee further growth despite the technical signal that the asset is overbought. You have watched the roundup of the global financial markets for today, July 4. Keep close tabs on the global markets on our InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online on a Monday.